given your day job and like the school of kids you've got on your Facebook, did we can show your
Exactly.
legacy lives on long, eh?
Yeah, exactly. We've got to, we're going to hopefully get them into the business one day. Hey?
Yeah. No, that's good,
I,
man. It's good to see
I
you
saw
again, man.
Simon on the plane on Sunday coming back from Cape Town. My grandson, he was with his three sons.
Yeah.
Sure.
No, it's like an army. Hey?
Yeah. Your wife's obviously very efficient. Well, I know she is.
Yeah, it was quite interesting. It actually worked out well. On the way there, we all sort of sat next to each other, which was quite tricky because then they tend to sort of egg each other on. But on the way back, we were late to book, so the seats available were spread out. So each child was separated, and that actually helped a lot.
Jeez,
I'm
man.
sure.
Yeah, props to you guys, eh? Especially like when I was traveling, like seeing parents handle kids on the plane. Yo,
Yeah, it's
You'll
you're like
get there,
very
Russ.
aware, hey? You don't want to
man.
ruin someone's flight trip. Believe me, we've all been the people who get on the flight and hear a crying baby or a child throwing a tantrum. So you sweat a little bit before and while you're on the plane, hoping that it's not going to be you. Hey?
Yeah.
Simon,
Yeah,
sorry, the only consolation I can give you is when you've had children and you see and your children are older and you see other people with small kids, you sort of like you know what they're going through.
yeah,
Eh?
exactly. Hey?
And you just
No,
think I've
you'll
been there.
usually get a smile. You'll get a smile from those people, but the others who either younger, haven't had kids, or maybe not, or just not really. They're not that sympathetic. You'll see the looks are very
No,
different.
no. Oh
So we
yeah.
try our best.
Yeah, but you also get those parents where the kids just scream like blue murder,
Yeah,
and they
yeah,
sit there like they don't hear
like
anything.
nothing. Yeah, exactly. No, no, that's my worst. Hey? So we do try. We really try our best, but they were very good, thankfully. Hey? So we. Yeah, we were actually speaking about it when we got home to say that could have gone very differently. So we were quite chuffed. But it's yeah, lugging all the furniture around for a wedding to try and bring your kids is definitely something we will try and avoid. But my in-laws were at the same wedding, so they came with. They weren't able to help out, so had to bring them with. But yeah, they had lots of fun anyway. So it was nice to have them with us.
Yeah, quite interesting. As a grandparent, you forget about those early days, but you get judgmental very, very quickly about how badly people raise their kids.
No,
You
for
know, like
sure. Hey.
in our day, that
Yeah,
would
Doug,
never have happened.
Yeah.
yeah, Doug, we all saw that photo you
Yeah.
posted on like LinkedIn with the with the carriage at the bar. Was it at the restaurant or something? Unattended carriage.
Yeah, that
And
was
Dirk, how was
crazy.
your weekend in the Cape?
And that was great. It was great. We had six adults for my grandchild, so lucky we kept him busy. Um,
Okay.
yeah, on Sunday morning we went for a quiet breakfast, just Linda and myself at somewhere at the waterfront, and it's amazing how living in this little hamlet here that we live, everything is so peaceful and quiet. And we went to
Really is.
Tasha's, and the music was like pumping. It was like 9 in the morning, and everyone's close up, and it's a shit show. And you realize how you get used to a really peaceful existence if you don't live in a big city. And then there was this
Mm.
family that came draping in like Rolexes and jewelry, and each kid had its own iPad, and there was a pram, and the next thing, these feet came out of the pram and put themselves on the table, but they were like this big.
No.
So when the child eventually got out, it wasn't like a baby; it was like a 7-year-old.
Eesh.
And then it had a dummy in its mouth.
No.
No.
Yeah.
Probably still
So
breastfeeding, Dirk.
yeah, yeah. Well,
I
mother
was
of God, mother,
fascinated.
I don't think anyone's fed on those breasts. I'm sorry, but not for a long time.
Dirk, I was fascinated that you said a quiet breakfast at the waterfront. I would not go to the waterfront for a quiet breakfast.
Yeah.
No, I get that, but it was close. I needed some shoes for work. I buy shoes about every 4 or 5 years, and I desperately needed some shoes. You know how difficult it is to get shoes for men.
No.
I don't know if you guys battle, but yeah, I find it
No.
really hard. No, for girls, maybe not for ladies, but yeah, just to find something normal that doesn't look like a bit of a porn star or anything like that. It's, yeah,
I hope
a
you
bit of a
don't
challenge.
wear your pointy shoes.
I wear shoes that are comfortable. So I've got flat feet because I don't normally wear shoes most of the day. So, yeah. Okay, guys. Welcome. Who's new here? I know Robin. Yeah, sorry, I cancelled the last thing. We all have personal stuff, but I'll share it with you. My but's got cancer. So that was one of the reasons for going down to Cape Town as well. He's 2 years younger than me. So it's a really good reality check. I'm not mentioning that for pity, but the fact is, we're all in this group, and I'm pretty sure we all have things going on in our personal lives that are more important than work. So, yeah, so I thought today we'd chat about, obviously keeping clients focused during times of market volatility, because we've seen this. I mean, I have personally had some clients who were doing transactions when, sorry, I just got to send Mary a link. While Donald was busy deciding where he was going to, who he was going to throw tariffs at. Sorry, let me just send this to her quickly. And it's actually something I never went through before, because the timing's never been that perfect or that bad before. But it was extremely stressful. So I don't know if anyone else had any bad experiences, but it really drove home to me. Sometimes there's situations that we actually can't do anything about. Timing just sometimes is really bad and tricky. And this chap was moving from one provider to another, and it was about 10 million. We had to disinvest and then move Section 14. And the day that we disinvested, the market dropped like 3%. So I've got connections that it was actually moving away from Old Mutual Wealth. So I managed to, at 4:00, call some connections and get the transaction stopped, and then thank God the next day the market went up even more. So normally I would never ever do that, but this was an extremely challenging client who may not be a client moving forward. But so it was about as worse as it could get, because when you got a large sum of money like that, those fluctuations result in a few $100,000. And I mean, you realize, and I know with my mates in the UK, when they move funds, it's instantaneous. Over here, it takes like 3 days to get the unit price after they've disinvested. And then they go to the next provider, and it takes like another 5 days before. And obviously, if you go through a really bad 5 or 8 door window patch, you can sit with really unhappy clients. But those situations happen from time to time. But it really drove home for me the need to be able to hold clients steady during volatile times like this, because we're sitting here literally a few weeks later, and the market's up 20% for the last 12 months. So all that noise that happened, all that speculation, all those articles you read on MoneyWeb by all those very bright financial journalists have actually really amounted to nothing, because we're up from where we were. Obviously, it could go the other way, but again, it reminds you that I call it financial porn, as you know, but no one knows what's going to happen. No one knows what's going on or how markets are going to react. And it really beds down the understanding that, long term, if you're going to equities, it's a long-term investment, and in the long run, markets are always going to go up. So I thought, Joe, we just discuss ways of how we deal with this. I know if you guys listen to Trap, and if you had, you would have hear what those guys do, which is what we do. Is when stuff like that happens, you don't send out emails to clients telling them to remain calm and all that stuff. That work actually needs to be done beforehand. And on an ongoing basis, I believe, when we do our reviews. You know, I've learned over 30 years that when things are plain sailing, that's when you've really got to be very, very vocal about volatility of markets, about the fact that there are market crashes that are going to happen, and that it's simply part of the process. It's opportunities to buy into companies at discounts. And the only reason markets do go up is because there are those opportunities when markets drop. So yeah, I thought let's just put it out to the floor, and maybe if anyone wants to share any experiences that they've either had in the past or recently with the volatility, and how they've dealt with it, and either good or bad stories, guys, because we're all human. I mean, as I say, this client may not be a client soon, partly because we may not want him as a client, but he may also not want us as an advisor, which is fine. But yeah, anyone got anything to share?
So sorry.
I'll speak after you, Mel. Go.
So I had an interesting case where it's actually quite strange for me to observe a client that I've worked with for a long time, probably for about 15 years, and I've watched his wealth grow like phenomenally, and how his character's changing. And he has got a brother-in-law who is super, super wealthy, and he's also married to a woman who has inherited vast amounts of wealth. And as I said, I've watched his character change and his personality change, and how he's becoming more arrogant as the wealthier he gets. And I had a situation where he phoned me, I think it was when the S&P 500 dropped. And I've got some cash sitting in offshore for him. We're waiting. We've parked it for a bit. And he phoned me and said, "You have to get into the S&P today, and you'd have blah blah blah, and money has to go in today. You have to trade today. You have to." And I said to him, "You know, we don't time the markets. That's not the business we're in." Because that's when you're going to lose money. He's like, "Yeah, but if you don't get in today," and I said, "It's not as simple of just, you know, doing a switch and transferring money into an account," and trying to explain to him, and he was really irritated with me. And anyway, so I just said to him, just leave it with me, because I didn't actually want to get into it with him at that point. And thank God we had the public holidays. But I remember he phoned me on I think it was last Saturday. I didn't take the call, and he left a message saying just wants to check if I actually went into the market to make sure he hasn't lost out on the S&P 500 when it turned. And I phoned him on yesterday, actually, and I said to him that, you know, we're not in a business to time the markets, and if that's the business that he wants to be in, then unfortunately I don't want to be his advisor anymore, because that's not how we work. Anyway, I managed to calm him down a bit, and he then understood, and I actually sent him a really nice graph, and I just said, this is what happened, you know, with the S&P 500, and this is what would have happened if we went in, and blah blah blah. So I had the opposite effect with where I'm finding I've got some clients who I've sort of grown with, and they're becoming wealthier and wealthier, and I'm watching how they're becoming more arrogant. I don't like that, you know. And I'm finding that's quite challenging for me to deal with, because, you know, a lot of the clients that we do deal with, I think, you know, they're understanding time in the market, they understand that you're going to have volatility, etc. But there's I don't know, there just seems a generation of clients that they're growing wealth quickly, but then of course the ego and the arrogance is growing too. So I don't know if anybody else has got that sort of experience.
Yeah, look, I've had a similar thing. I think there's been a managers change people. We've got a client that we kind of potentially working with over 100 million. And yeah, the same kind of thing. You know, he's, no matter what who I put in front of him, who's a investment expert, thinks the S&P is overvalued and this and that, and they're completely missing the point, because the reality is, and I got to think about this. I was lying on the beach in Mozambique for 10 days, and after this, thank goodness. And you got to go back to the basics, and the basics are like, what's the money for? Like in a case like that, this person's got way more money than they ever thought they'd have, and way more money than they could ever spend. And they suddenly getting really, not that being tax efficient is not important, or this or that, but they start turning over every single stone, and in the end, they kind of create such fear within themselves that they can't move. So they're going to sit in cash. And you know what the reality is, they can sit in cash. So again, this whole thing kind of reminded me that we got to remember now, with the first clients I mentioned, yesterday's email, because now the money's gone to Glacier, and they've held back a percentage because it's got to be on the money's going to go out Saspin. And why is this the case? And this about fees. And I was able to email him, say, look, those aren't advice fees, because I'm not even sure we're going to be charging a fee. And he was like, okay, thanks. He came back. But so our clients I agree with you, Mel. When there is more money involved, they can get more difficult. They think that they're different, and yeah, sure, maybe they're different, and then they've got a few more zeros or the commas in a different place. But at the end of the day, I think again, it's important when we're onboarding our clients, and then even when we're working with them over the years, is we keep reminding them, what is the money for? And part of that is, if you've done proper cash flow planning and the client has excess funds, well, then what are you going to do? Are you going to wait till you die and leave it to chance that whoever inherits is going to spend it the way you'd like them to spend it? Or are you going to dictate from the grave? Or are you rather going to, while you're still alive and healthy, help the people who want to benefit from those funds spend it in a responsible way, in the kind of way that reflects your personal values and the values that you would like to see your descendants take? So I think that is a real case. And then if you've got a sliding scale, then you start thinking, I'm going to earn X amount from this guy with like 100 odd million, or I'm going to earn the same from a guy with like 40 million, who with us is still a brilliant flipping client. And the guy with that less money, it's still not enough money that he can buy a Ferrari every year. He's still got to be careful. So actually we can have a lot more value. So like, who do we really want as a client? So it comes back to, I think, and the beauty of situations like this, where we've had this market volatility, it allows you to think back, but get into the basics of what it is that we do. And then each of us is different as planners. What kind of a market do we want to operate in? Who do we want to work with? And that will evolve. So I think younger planners, will be more comfortable dealing with people around their age. And as you get older, you will get more comfortable dealing perhaps with people with more money. And I know Dylan's going to shoot me down now. So it doesn't mean that if you're a young advisor, you can't work with very wealthy people. I'm kind of generalizing, which may or may not be right. Russ.
I was just gonna say, Cindy, do you not want to go first? I can go after you because she was gonna speak after Mel, so I can wait. It's fine.
Okay. Yeah, it's such a similar story to Mel's, but it wasn't now. It was in 2017, and the client lost it with me because I didn't move his money when the dollar moved. And I mean, it was a long time ago, and so I was obviously quite fresh in the game, and I was just so absolutely shocked. And then we decided we're not a match, because I can't imagine switching every single time someone says the currency is moving. And the relief that I felt when we parted ways was palpable. And the other thing that I wanted to say is I'm working with a lady that's going to be retiring at the end of June. And that I'm feeling quite nervous for her because she does have a finite amount of money. I'm the first advisor she's ever worked with. Her husband died a while back, and she inherited a bit from him. And she came to me with her pension fund statement after, I think, 20 to 25, 30 years of working. And she said, is this all I'm getting? So just, yeah, two thoughts on that is that people really don't know what they don't know. They think, oh, I'm working, you know the story. I don't need to tell you that. But I mean, it is quite scary to think that with market volatility, she could actually be retiring into a downward cycle, which is really scary because I'd love to protect her, but what do? I can't stick her in cash.
We're not magicians.
Yeah. Yeah.
Oh, look, I think,
That's it.
Cindy, you've got to just kind of take care of the sequence risk, and you've got to plan. How old is she?
She'll be 65 when she retires at the end of June.
Okay, so she's got a 35-year time horizon.
Yeah.
So, that's what it is.
Yeah.
Russell.
Right, thanks. Yeah, I think some of the points though, from what you've mentioned, I also resonate with a lot of that. So what we started doing more since last year, and something we kind of picked up, I think that's why it's so important when you had that first meeting with a client, because we've also turned away clients. We basically use that first to two meetings of like diagnosing the situation, but we actually also weigh up what is their expectations in this partnership that they want, and I think you get to a fortunate position, and I think sometimes younger planners might think, oh, it's privilege, but it's actually it's hard work. I've realized that you've gotten in a position where you can choose your clients now, but managing the expectations and also gauging what they expect out of the partnership, we find is key in the beginning, so that you can see if we like really a good fit. And also you can kind of gauge of like what is their knowledge when it comes to investing, and 9 times out of 10 also what has their experience been with a planner. So I think what you said, Dirk, earlier about sending information or having newsletter talks about like market volatility before it happens is where it's key. That's true. We also think that that's why you need to do a lot of like coaching and lifestyle financial planning talks or engagements prior to these situations, so that you prep the client for those, so that they don't market react. And I think the other challenging thing there as well is like we have to be so careful, because we're human as well, but we have to be so careful as planners that we don't give into like their emotional biases, and then we start doubting our initial advice on edge as well. So I think that's where it's very key. And then what we started doing, I think, just to initially answer the question, we started actually asking 2 questions to clients when we first started talking about investments and wealth and having that discussion. Is that first we address the kind of like perception when it comes to money of like, okay, with you wanting to accumulate wealth and obviously the purpose or goal intention behind it, who are you doing it for? Are you doing it for yourself, or are you doing it for others? Because 9 times out of 10, and this was actually mentioned by Morgan Housel in a podcast recently, he said, too many of us do things or accumulate wealth to look good in the face of others. But if no one was looking, what would we do differently? And nine times cases we live way below our means. And then the second thing that we started like touching on with clients is like, okay, yeah, we can invest money and grow it on the market, but section the money off and say like, okay, how much do you need to give you comfort, basically? And that's not to say put all your money in cash, but we work on the idea of like, okay, it's a peace of mind account. It's going to give you maybe like 3 to 6 months of salary. It's for emergencies. But it could also be like, let's work on a year's basis. And then does that give you more comfort and insurance, aside from like the notion of like, okay, if anything happens in the market, I'm fine. I've got a year's worth of salary backed up. I know it's okay. So we also have that type of discussion with the client of like, how much money do you actually need to see from a cash and accessible point of view to give you comfort? And then we also discuss of like, okay, is that right? Should you apportion more to market or long-term investing? And we take the discussion from there. But we find that helps a lot, because a lot of clients, they've had experience with advisors where the advisor just takes all the sum of the money. They don't even do goal proper planning, and then they just put it into one unit trust account, and it's fully shares, or it's a high amount of shares, and then no one preps them for market volatility.
Yeah, thanks, Russell. I think again I think you're speaking to the point of talking about the bad times during the good times. It's really, really important, and you've got to keep on repeating it. Simon.
Yeah, there's so many things that I jotted down here. Russell has literally just repeated, so I'll try not to repeat too much. But he was spot on what I was thinking, listening to some of the points I raised. A few years ago, Dirk, and you've repeated it in the last like 2 weeks or so. You were kind enough to share your slides, and I was watching the group who wanted to be on that extra session. And again, you were more than happy to share your slides. For me, that first meeting, like Russell said, is so crucial for many things. One, potentially picking up early, like Mel and Cindy had said, about clients that it's going to be a train wreck at some point along the way. It just depends when, and you can kind of pick that up. But I also realize that there are times in your career where, if it's earlier, or it depends, you might need to take these people on, and you kind of know that at some stage you might part ways. Other times you might not be able to pick it up, and it happens anyway. But that first meeting for me, Dirk, I think I always could imagine what I wanted to achieve, but I never had that sort of structure to present it to a client so they fully understood, what we're all about, how we charge, what our philosophy is about markets, what we can do. So Russell said managing expectations, like the incidents with Mel, where these timing issues are pointless trying to help those clients. You're going to get it wrong anyway, and then the client's even more cross because now that you've done it on normal sort of operation timelines, you've missed the gap, and all of a sudden they're angry with you anyway. So that's always super difficult. What we do, so we try and set the tone initially and be proactive. And you mentioned about communication. So I've always been very undecided on certain things. So we've got within our CRM, we can send monthly statements, and we could have done that for the last few years, and I've actually avoided it. Purely because I think sometimes it promotes the wrong behavior. And the reason I mention that is, during these times of market volatility, I've always wondered if it's worth sending out communication or not at all. And I've kind of gone with the idea that, we've done a lot of our proactive work along the way, onboarding, reviews, so that when there are times like this, my gut feel is I have to communicate something with clients. So I do send stuff out. I do send a newsletter out, and it's very much just reiterating the points that we've discussed in our review meetings. Just, hang in there, that type of thing. It's not, I try not be too cliche, but just make sure that they need to be thinking on the right sort of lines. And the return I get from that is actually very little people respond. And I often think to myself, is that a good or bad thing? In my mind, it's a good thing because they're comfortable and there's no concern. Those who do respond, we then, I'd obviously, you get different types of people, and you kind of already know this when you onboard them. So you know who's more likely to sort of get a bit concerned and they want to get to do something. When that happens, I often go straight to them and say, let's set up a quick meeting. When I do that, I'll go back and look at what the most recent sort of planning was done for them, and I'll show them that even with the adjusted figures, does your plan still work? Can you see how little the impact is on your long-term sort of outlook? And they immediately calm. And I'll say to them, it's very likely that when I next sit down with you, whether that's in 3 months for your review or 6 months or whatever it is, that maybe markets have moved for the positive, and no one needs to clap hands. That's just the way things go. And you'll see that too, even though things have jumped back or slightly better than when we last spoke, you'll see that the plan doesn't change materially because of these sort of minor short-term movements. The other thing is how important in these environments that when you have retirees or people who are obviously drawing on money, it can be quite different. And I think that is really important when you do that planning to understand, to get them understand the impact of, like Dirk said, that sequence risk, because for them, it's quite different in terms of riding it out or waiting it out. They are now drawing on the portfolio, and then it can be a little bit more significant. But I think that is the importance around making sure that their portfolio suits them. But yeah, I think Russell hit the nail on the head. I hopefully didn't repeat too much of what he said.
Yeah, no, that's great, Simon. And again, what we do, so we use the Humans Under Management newsletter. If you guys haven't looked at Andy's stuff, it's It's
I
absolute
do as
flipping
well,
gold.
Dirk. It's
And
fantastic.
I'm just going to share quickly, but the front
Mm.
page of every newsletter, okay, is this.
Mm.
Okay,
Oh, that's
the numbers
cool.
over a month and the numbers over 30 years.
Yeah,
Okay,
it's fantastic.
and this just gets repeated every newsletter, the beginning of every single newsletter. If you're going to pay for any content,
Mm.
and he's a good mate, but I'll punt him. This stuff is flipping unbelievable. And if you get access to that, his premium site, where I did a talk recently in St. Francis, where I spoke about market, and it was just by chance. It was flipping, just been stuff was happening. And a mate of mine's brother was out from the US, and he gave me a mega cap, which was really cool, which I put on at one stage. But different looks from different people, quite interesting. But that stuff is really cool. So if you, what I'm against is like something happens, and then you send some sort of like an email, because it can, if it's out of the norm, if it's not what you normally do, people can very, very easily view it as that you are panicking, and that's the last thing you want. So this ongoing education, I can't stress it enough. It is ongoing. It's you can make it generic. Just send the same message out all the time. Because then when you're out somewhere and people do call, they just say like, okay, so it's happening now, eh? And you say, yeah, it's happening now. Just sit tight. Cool. And 3 days later, the market's back up from where it was. And it's like, okay, we know this is going to happen. Andre.
Hi, Dirk. Yeah, just a few smaller points. Basically, to answer Mel's thing about the client that wants to get in and out the S&P 500 in the perfect time, I always recommend, if the clients are like that and they like to do stuff and get in and out, then give them 10% of their money that you don't want and let them play with it. I think Alan Smith, I think it's him that calls it the playpen. Like, I think that's a really good idea. Give them some money and then let them try and be traders and whatever that they want to do for their excitement. And then the other thing is, yeah, I mean, obviously we're not traders or stockbrokers. It shouldn't be our job to get the client in and out. And then the other thing being, also, if you start to do that and you, like Cindy's client, that wants you to get in and out now because of the dollar, what happens if you're doing that for one client but not for another? So if you're not using a DFM, a multi-manager, or a bunch of index funds that you treat all your clients the same, then you're also exposing yourself to risk of treating one client unfairly and comparing it to another one. If you get in at the right time, then you've done the other client a disservice. But if you got in and it went worse than the clients that you didn't get to, you actually did them a better service than the one you responded to first. So yeah, just basically those few points and saying avoid that kind of behavior totally.
Yeah, I mean, again, Andre, you got to run it as a business. You can't have a different solution for every client. As a business, you've got to say this is the investment strategy that we believe in. The way it will vary for clients is dependent on the money they've got and what they're trying to achieve. In other words, the inflation target. And then yes, there are some clients that want a share portfolio, but as long as that thing gets managed back again in line with the plan, the plan has to dictate everything. So that is why you can't do this job without having a plan. If you don't have a plan, then you're fooling yourself and you're bullshitting clients. So the plan must always dictate, what the investment strategy is for the client, but then also have defined parameters along which you work. Yondela, I see you had your hand up before Shannon. Are you still here?
Yeah, I'm still here, Dirk. Yeah, so I mean, I was listening to some of you guys speak, and I'm thinking, young planners in general, many of us are very, let's say, small clients with very small money, and many of my clients specifically are Black clients, and many of them are new entrants into this world, and they have no idea what market volatility is or what that even means. They and I think something that I learned from this group is is your clients must trust you, right? They must have an affinity towards what it is that you do. And the more that they trust you, then bringing out a plan and telling them, listen, things are going to be okay. I mean, some of my biggest clients to date, these guys, they don't call me during market volatility because they have no idea what's happening, because this guy's a lawyer, he's a director at ENS, and he has, some of the guys at Northern Platts are like geologists, and they really don't know. And I'm thinking, I guess maybe you guys are really privileged to work with people with a lot of money. But I'm thinking, some of us, I mean, some of the young planners that are here, some of our clients just have no idea what's going on, and they just need their hands to be held through, this journey, and obviously, as you provide constant training and education to them over time, they start to see your value, and I think that's also important. I think I'm super big on the education part of things, because my clients, not a single one has called me. Maybe it's because they only have 100,000. So I don't know. I think for me, one thing that has kind of stood out for my engagements with every client I speak with is making sure that they have an understanding of what it is that we are doing. We're not trying. This is not the lotto. We are not gambling. There's this plan, there's a strategy in place. There's DFMs that are handling, our strategy, and hopefully, we review this, annually, and with time, they start to trust with you other people. And sometimes when they refer clients to me or their friends, they have no idea what I do for them. All they say is, hey man, listen, speak to Yandela. He has given me a lot of like peace of mind or direction. Because sometimes I ask, what do you say to your friends when you introduce me to them? They're like, hey Yandela, all I know, man, is you just give me a sense of, direction or like peace. And I think that has been something that I've learned quite a bit from this group, and that I've actually implemented in my, small little world. And I think we should not lose focus or lose sight of that, because I think fundamentally what we do is we really provide people with peace of mind in times of, volatility or difficulty. Yeah, so that's all I had to say there.
Thanks, Yandela. And let me just start off by saying, when I was your age, I didn't have clients like this. Okay, let's use slang. My book has grown over the last probably 10 years. I've been doing this for 35 years. Okay, so I know you hate it, but this is really, really, really a tough career choice. Okay, but I promise you now, I sat with new clients the other day. He's an engineer. She ran HR for a listed company. They've got money offshore with Ranmore, which is Sean Pesh. Directly, they deal with Sean. Okay. When I explained to them the 3 levels of fees: asset management, admin, and advice, they had no idea. Okay, so we're talking highly educated people, extremely intelligent people, we would be led to believe, because of the nature of the work that they've done. And they don't have a full understanding of the investment world. So I promise you right now that the guy with 100 million does not have the understanding that you have. And that's the problem, because he hasn't been educated. He lives in a world where there are people who can pick stocks and who know everything. And because they've got money, they look really impressive. And people are under the misunderstanding that they know what they're talking about. They know shit. Okay. They know nothing about investing. The second point that came out of what you said was, again, separating what the investment markets do to advice. The comfort that you provide, that means you're doing your job properly. That is our job. Our job is not to predict what markets are doing. Our job is to help clients choose a suitable investment strategy based on their needs, and to a certain extent, I'll say this, risk tolerance, because I don't like risk profiling, but to an extent. But once we get that right, we should be able to stick with that, because we've got the emergency fund. If they're retiring, we've taken care of the sequence risk through how we're structuring money for the first 3 to 5 years. But what we do is we are their shoulder to lean on. We back them up. That is what we do. You can be a CFA, you can everything. If you cannot get clients to rely on you, to have faith in you, to lean on you, then you're not going to survive as a financial planner. They don't want to know what you know. They want to know how much you care. I know it's corny, but it's absolutely true. So thanks for that, John Della, because I mean I think you brought up some really good points. Shannon, you had your hand up earlier. I don't know if you still want to talk.
Yeah, I think you've covered it. But just one of the things for me with dealing with clients and volatility and all of this is just your positioning right up front from the get-go. And one of the things that I do with clients is I tell them what I'm not. And one thing I'm absolutely emphatic about is I tell them from day one, I'm not here to time markets. I'm not here to do money timing allocations. We're in the long-term game, and if you're looking for somebody that wants to, you're going to phone me and tell me to pull the trigger now, well, then I'm not your man, and I'm walking away right from the beginning. So that's one thing I am absolutely rigid about in terms of my positioning, and it helps me in the long game because clients know upfront that's not what I do. So there's that. Something that helps to me explain market volatility to clients and timing of markets. And a lot of these asset managers have done this exercise where they've gone back and they've looked over a 20-year period and missing out the 10 best days in the market that happened at absolute random periods over those 20 years. So you're talking 0.1% of the time makes anything between a 35 to 45% difference in the outcome. So, you know, once clients start to understand things like that it is a long game, you're not going to find when those 10 days are. It just explains the futility of timing of markets to me. So that's just something that I find quite useful. And then just Cindy, you know, thinking about you and that lady that's retiring and, you know, how sensitive it is now, you know, the question that maybe you should be really discussing with her is really, should she be retiring? You know, it's that kind of thing as opposed to the sensitivity of where she's entering the market.
Yeah, great point. Thanks, Shannon. Simon.
Yeah, you also said a lot of the things I was thinking about there. Just Yondela raised a few interesting points, and I think all of us as advisors, it's incredibly difficult because you're fighting against a few things. I think the longer you're in the game, the more you need to be reminded of how little people actually know in your space. So Dirk mentioned the engineers. I could mention various occupations that we have as clients, and you just have to remind yourself that people know very little about our industry, and without trying to sort of patronize them or belittle them or whatever, we sometimes forget that. And I think we've spoken about this in previous meetings that, you know, you don't have to sound intelligent in this game. I think if you do the basics very well, you will do well, but it is hard work. It's because you're fighting against human nature in many aspects. The behavioral stuff of people wanting to try and sort of switch or trade things or whatever will always be there. It's never going to go away. So you're constantly sort of fighting against that. And the other thing is that depending on who you work with, so in my instance, it's I don't really have many high net worth clients. It's really the tip of the iceberg, if I even have a couple. The majority are sort of middle sort of working class, if I can put it that way. And so they are fighting against their budget every single month. You know, to give away some of your cash for sort of these long-term things is really difficult because we've all got commitments. So it's really tough. So you've got these conversations, you've got to sit down with them whereby they have to try and prioritize the longer term stuff versus, you know, the wants and needs now. So I think just to Yondela's point, it's not easy. This career is not easy. To start off is not easy. You regardless of sort of which sort of sector you're working in or which sort of client base, it's really, really difficult. And I think if you're working with clients who are new to this game, to create first generational wealth takes massive sacrifice to start with nothing, to inherit nothing, to not have a business. And I'm not even referring to the sort of South African landscape and the demographics, because we can't change those things. That's really, really difficult. But let's just use anyone who starts with nothing and they need to create first generational wealth. It is so incredibly difficult. And I don't know if anyone's heard that story of, I can't remember the sort of background, but it basically goes along the line like, you know, my grandfather walked, my father rode a horse, I rode a Ferrari, my son will walk or ride a horse, that type of thing. So even those who have done the hard work before and give that generational wealth to someone else, it's very possible by human nature, someone's going to destroy that. And if we're not there to sort of help educate them along the way, whether it's first generation wealth or fourth, the challenges are very similar across the board. And I think that's our job. It's to continuously educate people to sort of assist them to make sense of a lot of this stuff.
Yeah, thanks, Simon. Great insights there. Russell.
Yeah, thanks. Also some great insights. I echo quite a lot of what Simon says, and I think I think sometimes a lot of us being long in the game, we get misunderstood that we deal with ultra high net worth clients every day. I echo the same as Simon. We don't deal with ultra high net worth clients or 10 or 50 million clients every day. We still deal with a fair amount of our clients are still like young professionals. And like Simon says, our biggest challenge is probably like managing and giving them self-awareness about their cash flow. But I also think like there's two cases I've experienced, real life cases from a practical point that I think adds some perspective is that firstly, we're dealing with younger clients that don't have that wealth now. It's such a big opportunity. And I've seen it in real life being longer in the game now, probably around 10 years now in the profession. It's that those younger clients you starting with a clean slate. So the opportunity there for us is like teaching them about the investment fundamentals. And they might not have the wealth now, but your opportunity there is actually to give them education and coaching that they never got in school or varsity, no matter how intelligent they are, and to make both small habits or actions of, even if it's starting at 500 to 1,000 Rand a month, buying into the market so that they can understand how investments work. Because a lot of clients that don't work in finance, they have full uncertainty. They don't understand how investments work. So from a younger age, when you're starting them with a clean slate, you can get them to see through education, like every time there's market volatility, start seeing that as opportunities rather instead. There's you guys might have seen, but like there's a guy I follow, and he's not even in finance, but he started it as a passion because he couldn't get proper advice when he was younger. But he has an Instagram page on Instagram called Market Hustle, and he's got almost 1 million subscribers. And he's just focused on the basic fundamentals of compound interest, what are investments, giving people education of like not to like panic sell and all that, and to do the education side that a lot of them didn't get, and they're based in America, that people don't get there, or younger people don't get, and to see it as an opportunity. And the idea there is like, if you can build them with a good education start, when they have like nothing or haven't built up any wealth, they will hold you so much more true or with such high importance when they start building up wealth. And also because you've increased the education know-how, when they are marketing events, when they have 1 million or 2 million later on, they won't panic because you've been there and teaching them the fundamentals when they were younger. And to prove this, I have a real life case where they've been with me for about 9 years, but I worked with a couple that were, they came straight out of varsity. They didn't come from rich families. They became chartered accountants. They started working in PE as article clerks, earning 12,000 Rand a month. And I got them to invest slowly, but surely, a little by little. And I started teaching them about finance and basics. 8 years later, they're both investment bankers working in the UK now. They together are earning or pulling in about 10 million Rand a month, basically. They've skyrocketed their career. They've bought like their property portfolio. But because of all of the small, minute actions over the years, and obviously they made some great decisions in their career, they are so much more astute now about their finances and like not living above their means. And also when you coach and take on like the small clients, you don't realize not only for like your own development, it's helping you level up, or it's where you get the experience as a financial planner over the years to eventually become more equipped to advise higher net worth clients or more complex clients with their finances. But inadvertently, if you continuously do good work, just like investments, and it compounds, and this is what I've also seen with a second real life case. It's happened with a client that was referred to me now about 2 weeks ago. The smaller clients will talk about you in rooms where you're not there. And they won't talk about how much money you made them or how much you grew their finances or their investments. They'll talk about like what what you mentioned, like the peace of mind you gave them, the clarity, the awareness, he was there to coach and educate me on these aspects, when market volatility was happening. So that's the thing I think we underestimate is like how people talk about us in rooms when we're not there. And that what adds to your brand. And that also relates to like long term, it brings referrals. So like just to finish off a real life case that happened 2 to 3 weeks ago, I was referred a doctor that had heard my name in the same practice where I was dealing with 3 or 4 of his colleagues that were my clients. I didn't even know about his wealth. We had our first 2 engagement meetings, and I was basically just asking him like, what is stressing you out? And he was a DIY investor. He had been accumulating or just like investing and doing everything himself. And he was just chasing returns, but no one had asked him like, what is your purpose of like accumulating so much? Where does it stop? How much is, for lack of a better term, how much is enough? No one's asked him that. And that's also why he's never had proper advice. The advisors he did deal with in the past were just policy salesmen. And we're now at our 3rd or 4th meeting, and he's much more older. He's like 40, 45 years old. He's accumulated about 10 to 15 million now and always been chasing his returns, but he still has, and he lives a lean life business. Like he has his own practice and he still has anxiety. Like he thinks he doesn't have enough because no one's done the planning. And that's the value add. He didn't come to me because his colleagues said, oh, Russell grew our money by this much. They heard about all the human side stuff that I did for them and the ongoing engagements they had and the conversations we had. And that's why he came to me.
No, that's great, Russell. I mean, this reminds me of potential new clients coming yesterday for the coffee chat. He runs IT for a global logistics business. And he sits on their pension fund committee. I mean, because he sits there, he understands a lot of the principles around, for instance, why moving into, lifestyle portfolios are really shitty because, you move into cash before you retire, and then you've got to get back into equities later on and things like that. But also, so he had just worked with a bank broker in Joburg, and she said, so yeah, what we've done is that part of life where we just accumulate as much as we can. We've done that. Now we're in the next phase. I like the fact that you don't even know how much money this guy's got. Like we don't find that out either until like after the second meeting. And he said his relationship with the bank broker was basically that meet twice a year, look at the portfolio, look at the funds, and that was it. And he's paying for advice for that. Now we do so much more as proper lifestyle planners. We do so much more, and yet we doubt ourselves, and we doubt who we want to work with. And again, we've got 1 or 2 clients at the moment, like this one difficult chap, who I've sent him the fee scale. He knows, he's been through it all before. The bottom line, if he only wants me, if he wants to do some as a DIY and us not earn fees on that, I'm going to say cheers. Okay, we got 1 or 2 other clients that are kind of doing the same thing. They're kind of handling things on their own. You don't want to take responsibility. You don't want to be earning fees on 20% of someone's portfolio, being responsible for their whole financial life. If they're not going to trust you, then they must rather go and do it themselves. Because I promise you, this engineer guy, I told you, with the HR wife, when I explained all this and we finished the last meeting, and I said, okay, you're in Randmore, that's fine. We can leave it there, but you need to wrap it because of tax, CGT, estate duty, planning, and all the rest. Great. So I said, and I said, okay, we want to move forward. So I said, you understand, number one, you're going to be paying a wrapper fee. And number two, you're going to be paying me for advice, which you're not doing at the moment. He said, absolutely, I'm absolutely happy to pay. Now, those are happy clients. The other clients, I mean, Cindy mentioned the relief she felt when she discontinued that relationship. When this money eventually moved wealth and went to Glacier, I was like, fuck, I was so relieved. I mean, I was like, I've never been that stressed in my life. And again, it highlighted, I don't want to feel like that. I don't want to feel like that. And if a client doesn't accept how we earn our fees and doesn't want us to manage their overall life, we have to be brave enough to say, that's fine, but then I'm not going to work with you. This is how I work. And if you're not prepared to do it, we're just simply not seeing eye to eye. And I promise you, the relief you feel when that because on those relationships, you're always feeling like a stepchild. You're like always trying to prove yourself because you feel this guy's kind of, he's okay, but he's not. And you know that person's just using you to do a bit of cash flow planning or a bit of this, but they're still going ahead and they want to do their own thing. It's actually disrespectful. But fine, if they want to do it, it's fine. But then they can't come in and pick your brain for all your goodness and then run away with it and go and do what they want to do in any case. So I think and I know it's difficult when you're starting out and you want to, you're like, anyone who will be a client you want as a client. I mean, I get that. And look, sometimes you just have to do that. I've got no problem with that. But I promise you, when you do start coming out, this is the long-term game. When you start getting out the other end, you start getting rid of those people, those relationships that don't sit well with you. It affects your whole person way of being and allows you to show up so much better for all of your clients who really do appreciate you. And what we do is not for everyone, and that's absolutely fine. We have to understand that. And it's more difficult when you're young and you're starting out. I get that. But I promise you, this is where you've got to aim to get to. Alex.
Yeah, if I may just, sorry, I just want to add, sorry,
no,
Alex, but like,
good.
I just want to add to what you said as well, 100%. And I think also like one thing I've also picked up, and I think to your point, Dirk, it's like also, we also have that opportunity in that first meeting with client. When you start finding out like how much they've been doing, and that's when you kind of like feel out if they're a good fit, if you want to work with them, and especially if you come across clients that want to do X, Y, Z, or they're so bent on like they're not listening to you, then we actually are open with them. So like, well, why did you come to us in the first place? What's the point of us having involved if you're going to do everything yourself? Then it becomes like it's not really going to be a beneficial partnership going forward. And I think also to your point, what I wanted to add on, because I know you're going to get picked on for this, from younger planners. And I think I can say this because I'm like in between. But I can say as when I started out, another like area we need to be careful of as younger planners is that, and you obviously have to use your own discretion, but like I learned from my experience, and I used to do this well. You need to be careful you're not chasing the client for their net worth and the money. And instead of like feeling out if I can work with this client, because it's going to be so painful working with that client in the long term. If you're chasing of like, this client's difficult. Oh, but he's got like 2 million to invest. And I'm thinking about the fees I can make off that client, right? The moment you start chasing money, it's just going to start the relationship poorly, and you're going to end up resenting that partnership because you're going to find it's not fruitful, purposeful for you, and you don't really enjoy it. I mean, that's why like, and I've also realized like it might like younger planners might say easy for you to say, but I can guarantee you now, and I've seen it countless times in my career, letting go of those clients, you can find 2 or 3 more clients you enjoy working with in that time that you're saving yourself. And later on, it's going to happen. Later on down your career, if you stick it out longer, you are going to end up eventually firing that client with them because they costed you so much in terms of like stress and pressure and all that as well. I mean, we let go because they didn't fit our model recently, and we did it peacefully and simply. We let go of 12 clients within the last 3 to 4 months. And it was just like clients that weren't within our advice process or model. And we said, that's completely fine, Alex, sorry.
Alex.
Yeah, just 2 points that I'll make, kind of what you guys are talking about, and then also to just go back to the topic of today. Also had a client who was retired and essentially was going to be left with R1 million to kind of live the rest of his life. Brought him and his wife in a couple times, explained exactly how we work, what our process is. We have to look at everything as a whole. They said, cool. They went to go look at other financial planners, and other financial planners sent them these fancy graphs after one meeting and said, your money will last this amount. So I just said, listen, are you going to go with them? Because again, no hard feelings, but I've told you how we work. This isn't how, how we kind of do business. And then they wanted to meet me for a third or fourth time to just again explain how we work and why they, after one meeting, have been sent stuff by other advisors and we haven't, shown them, what they were looking for, or what I thought they were looking for. And essentially, I just said, listen, we don't work this way. You don't want us to look at your whole lifestyle. You just want us to look at 1 million rand and kind of, form basis and do all our work with just that and look at your whole lifestyle. So eventually I just said, listen, I don't think this is really gonna work for us. It's not how we work. Yeah, so they went on their way, and I think they were grateful that we kind of just open and honest with them, because again, to have 4 meetings, an hour each, it was wasting everyone's time. So yeah, I've also learned that you can't work with everyone, and again, what we do isn't for everyone, and that's okay. And then going back to the topic at hand, was dealing with clients when markets are bad. I know Dirk has shared our graphs or our onboarding process with a lot of you in the room, and in that third meeting where we do a lot of client education, the one topic that I make sure that I always bring up, and I say it kind of in tongue in cheek with clients, but it is said with an air of seriousness, is that at some point, if you work with us in this journey, you are going to lose money. It's completely out of our control, but there will come a time where your money is going to dip. And we show them the graphs and say, listen, there was a recession here, there was a recession here. We've had 3 in the last 10 years. If your investment horizon is 40 years, there's probably going to be another 10 more. So when, and I'm quite blunt with it, and I say, when it does happen, because it will happen, just know that, if you stay patient, you ride the wave, things actually will be fine. So when this latest market little dip did happen, 1 or 2 clients reached out and said, oh, okay, it's happening. And I just said, it's happening. There's nothing we can do about it. It's out of control. And they absolutely chilled, no problems whatsoever. So I think if you open and honest in that onboarding process, when times like this do happen, it actually makes it a lot easier. So yeah, that's how I kind of deal with these situations.
Thanks, Alex. Yondela, just on your comment that you put in the notes about we all have to eat, and that I get you, and I'm just going to, and you and I talk about this a lot. I got divorced many years ago, okay, and it, like most divorces, wasn't fantastic. And I had to change, I had to make a choice. Well, actually, I didn't have a choice. I had to make a choice. And that was to downscale my lifestyle completely, okay? I went from living on a 4-hectare estate with horses to a 45 square meter townhouse. I sold my horse box and my double cab, and I bought an old Jetta from my sister. The point I'm trying to make is, and I said this to someone years ago who was going through a tough time, and they really took it to heart, and I was surprised years later he still thanks me for it. But in this career that we do, and because I see it a lot, especially with older type brokers, oh, well, my kids, they're going to Rondebosch, they're going to private schools or whatever, I've got to pay for it. The client's needs have got, excuse my French, they've got fuck all to do with our personal lifestyles. And Yondela, I'm not for a minute saying that you live an extravagant lifestyle. I know that you don't. But the reality of what we do is that we cannot make our problems the client's problems. We have to find a way of having a positive attitude about what we do. If we're going to do this job and succeed, this career, we have to, through all the difficult times, remain as positive as we can and understand, and I know you get irritated when I say, give it time, it will work. It does work. You've only failed when you stop. And then it's not necessary that you failed, it's just you've chosen a different path. But I promise you, you have to stick at this. Anyone who makes money quickly in this business, and I say this qualified, is potentially a bit of a crook. Okay, there are very few people who can walk into this industry and have all the knowledge that I've gained over 30 years of making mistakes, bumping my head, going on courses, reading books, reading articles, listening to hundreds of podcasts. And again, I stress this, guys, we're all busy. If you are not taking the time to listen to podcasts, to read articles, your knowledge is not going to increase. And you don't have to learn more about the FTSE or the S&P. You've got to learn more about human behavior, about clients, about how, when I was sitting in Mozambique, I suddenly realized, because of the situation I've got where I'm starting to dealing with people with higher wealth here, just because by chance I'm in this situation. So I took it and I phoned 5 people who are, some I know, some I don't know at all. I emailed them and asked, I would pay for their time to speak to them for 30 minutes to find out how they deal with their high net worth clients. All of them but one has got back to me, and I've spoken to all of them. I tell you what, I've learned so much by speaking to people that I couldn't learn in books, because these are people who are doing what we're doing, albeit with a different kind of niche of clients. Now I've got, and believe me, that some of these are dealing with fund managers. So they're billionaires. Okay, so they're very different to what, so wealth is all relative, very different to what the people that I'm dealing with. But if you're not prepared to commit to learning and to giving this thing time, nothing is going to change. So we really need to know that. And just getting on a treadmill and walking along for 20 years is not going to get you somewhere. You've got to do interval training. You've got to stretch. You've got to do all those things. You've got to do absolutely everything that it takes to get to where you want to be. There's no easy ride, and I know I say it all the time, and I know I irritate a lot of people, but it's the simple truth. If there's one truth, that's what it is. And that's why if you listen to, what's his name, Jarvis, you think I'm blunt. He's flipping, he's quite rough. Another thing is, at this time, there are a lot of, it's the time where there's silver bullets, okay? So you'll see when markets are doing this, suddenly everyone's marketing guaranteed products, We track these indices and you guarantee this outcome and all that. People start looking, because now this time it's different. It's never different. Just remember that it is never different. But be very careful for looking for a silver bullet that you're then going to put in front of your client and say, this fund is going to sort out all these problems, because it's maybe happened to deal with this crisis a little bit better than another fund, because they've taken a certain window period that makes that thing look really good. So just remember, again, what Andy Hart says, stick with the things that have always worked. Don't go for these new flashy things that are going to work. Understand, the equity market is the great companies of the world, okay? What's made this really hard as well is the Magnificent Seven, because they've run for so long. So, where we've got some clients that are in funds and then they've got a share portfolio. Now, the share portfolios are looking really shit, because those guys are underweight in the Magnificent Seven, because they make up such a big part of the market capitalization of the S&P. And when they correct, it's going to really hurt bad. But by being underweight in those 7 big companies, they've underperformed the market. So you've got clients who are sitting, and this is again a problem. This is why the old inflation plus targeted works so well. Client who's in a fund that's done really nicely because they're exposed to the overall market, your average 4 to 6 fund, and then you've got a share portfolio which has done less. And the fact that it's run for quite a while has made it really difficult to have the conversations. But you've got it. So even someone like myself, you end up doubting yourselves. I'm thinking, well, should we be doing something different? And then you realize I still haven't done enough to educate these clients on an ongoing basis. So these are the hard times, but these are when we really earn our fees. Our clients aren't aware of it, but we need to be aware of it. This is the time when we really earn our fees. And if you're wondering what to read or who to listen to, Nick Murray, guys. Just find Nick Murray books. There are some podcasts, if you listen to that all the time, you listen to the same one over and over again, that's all you need to brainwash yourself. That's the right Kool-Aid you need to drink, because he talks about what markets do, and he's right. Anyone else? Really bad. Yeah, I think just again the whole thing on deciding on who you want to work to is really important. We had a session, I think at the end of last year about self-worth, about protecting ourselves, and it's really, really important, you know, because clients can, without realizing it, they can be, they mean, and they can be abusive, you know. And when we lose a client, it's never nice, or it's very seldom nice. It's very seldom that, you know, you want to get rid of a client, especially a client where we are earning well. But it really is important, the self-care, that we check in with ourselves on a regular basis, and we acknowledge the value that we add to client relationships, and that we also acknowledge that just because someone's been a brilliant businessman and they have a whole lot of money, they don't know our work like we know. Okay, and we don't have to know that in an arrogant way. We need to know, and we need to be able to protect ourselves, and that's what these groups are for. You know, if anyone's going through something like that, you reach out to people on this group. You know, have a chat, because it really, really is important. The volatility that we're living with isn't going to go away. So it becomes even more important to have that singular message about what it is that we do and our understanding of what markets do in the long term, and that, you know, we're not going to pick one magical fund that's going to solve everything, because I promise you, if you do, when that comes to the end of its run, you're not going to know what to tell that client. Anyone else have anything to add? Shannon?
Yeah, just something quickly, you know, talking about firing clients. I've had experiences where I've fired clients, and all of a sudden it's now turned the clients around, saying, hang on a second, we don't want to leave you. And then you ask them, well, what do you actually value about what I'm doing for you? And all of a sudden they start rethinking about their behavior, and they say, sorry, you know, they take a step back, rethink of it, and come back to you and say, okay, let's redo this, relook at it, and that kind of thing. So yeah, firing a client, and especially firing a client early, can really work.
And I think what, you know, Simon spoke again about that first meeting, and we got to understand that first meeting, it's a screening for the client, but it's an interview for us as well. You know, very seldom is our gut wrong. So, you know, if in that first meeting we're picking up a bit of a feeling where, like, this is not going to be a lot of fun, then please make that second meeting more difficult. Like, ask harder questions, because you're either going to flip that client into your Kool-Aid then, and I know that sounds horrible, but it's simple. It's what it is. If they're going to work with you, they've got to drink your Kool-Aid. You've either got to flip them to be on your page and to understand what it is, you know, or set them free. And you've got to understand, otherwise you end up doing a whole lot of work for these people. I mean, our guys we worked with for years, they're in a business together. We did all their business stuff. They did work for us as well. I would, like, you know, meet him for coffee or lunch to discuss something in his business. They had very little with us. And suddenly the first time they got into some money, they wanted to work with someone else, or they wanted, like, this whole sexy, hip kind of fund. And I said, no, look, this is what we do. This is what we do. And after years, and I'm talking years, 12, 13 years, the guy sent me a WhatsApp. I was really angry. And but if I look back, I didn't trust my gut. They wouldn't come in for reviews. They wouldn't fill in their budget form for reviews. They never followed through on any of the advice. But because they were lacquer guys, but if I consider the amount of effort, not just time, but the amount of mental and emotional effort that I put into that relationship, if that guy came knocking on my door today, he will never be given a second chance. Okay. So, I mean, you learn this, you'll learn this, and we're never going to get it right. And we have to understand that from time to time, we're still going to err. Or as, Mel was saying, things happen in clients' lives where suddenly they're mixing with a different group. They say you're the average of the 5 people you spend the most time with. So if you get a guy who's suddenly come into a whole lot of money and suddenly he's bought a sports car and now he's mixing with a sports car group, and those guys all talk about certain stuff, it's going to change him. People are human, and that might then change whether you're going to be able to work with that person moving forward as well. But being consistent in what we do over years, consistency is absolutely vital. And that's why you've got to learn. You've got to read stuff to understand what your view is, what makes sense to you, because then it's easy to explain to people, and it's easy to keep going back to what you believe is correct. And then when we go through these difficult times, it's easier to keep your clients, stable and get them through those difficult times. And they will thank you for that later. That's all.
I think just before, because we're probably going to end off soon, but I think another saying, and just adapted to like our line of work, if you already do great work when you work with difficult clients, just imagine how much better and how much you will thrive when you work with clients that you enjoy working with.
Sorry, Russ, can I just say something? Like, I honestly, at this stage of my life, I don't want to work with difficult clients. Seriously, I'd rather go and lie on the beach.
Yeah, I think also
Because
just to that point, it's like we only have so much time and I would say mental energy to like invest, because despite it being finances, it is still a personalized relationship built with the client. So I think that's also what I've learned over the years. It's like working with clients that fit you is so much more purposeful than like trying to make it work with clients that are difficult, because you don't have that time or energy to waste,
No, not at my age.
Yeah, Marlon, I think the
still
important
young,
part is that I think the important part, again, I mean, what the kind of wisdom I'm trying to give is where I am now. So it doesn't always apply. If you are young and you feel like you're a bit tougher and you've got a few strong brick walls there, go for it. Because I promise you, like we all know, anyone with kids, you can tell them what to do, but they're going to bump their own heads. Okay. So it's not, there's nothing wrong with that. There's nothing wrong. If you think this is a 50-50 and you want to give it a go because you're going to learn. I mean, it's very easy for me to sit here and say to you after all these years, this is what you must do. I know it is now, but for me, the timing might be different, and that's fine. I mean, the beauty of this group is that we have people all different ages and all different stages of your career. So, what we try to give you is like some of the stuff we've learned. But if you want to go and learn it yourself, there's absolutely nothing wrong with that. In fact, it's probably the best way for you to learn. But if there are a few things that you can take that are going to make that journey a bit quicker, that instead of taking 20 years, if it takes you 15 years, then we've saved you 5 years. And when I started this group, that's what it was all about. It was just trying to, help get people to a higher level in a quicker way, and especially because of all the misinformation that we fed in this industry, because the majority of what we get is bullshit, because of where it comes from. So yeah.
I think also just to add into you, that's the way I've seen it since you first initially started group. It's like we're not, I think even Dirk, we're not here to say we have all the answers, but it's more of like, this is what each of us tried. These are the mistakes we made. You can choose if you want to learn from them or not. Take what applies to you, and then you deal with the rest,
Yeah, I think we're done, guys.
Are we done? I think we're done.
Anyone else
Thanks,
want to add
everyone.
anything?
Thanks, Dirk.
Thanks, guys. It was a great,
Thanks,
a
Dirk.
great,
I think it was a
great
good
turnout
session.
today. I was starting to lose a bit of hope after last month, but looks like we're back on track. So
Still need to do the
but-
St.
and-
Francis
but-
Braai.
yeah, no, the groups when we have a session like this, it does give me hope. So, but it's cold at the moment, so I think we've got to wait for it to warm up a little bit. So, but yeah, I'm actually heading off to London on Thursday, and I'm going to. We work with Brett Davidson, so I've got a session with Brett, and then that evening we've got Trap Live, which is really cool, and then got another conference the next day, which is going to be great because it's you learn how they're doing things over there, which is very similar, but also very different to what we do. So yeah, but, I'll
Enjoy,
report
safe
when
travels.
we're done.
Oh, it's wonderful.
Enjoy,
Well,
Dirk. Safe
Look
travels.
No,
forward
we
to the
will.
feedback, Dirk.
Have a good beer.
Cool.
Have a Guinness.
Cheers,
I'm
everyone.
trying to drink a lot less. So anyway, cheers, guys.
Bye,
Have a good day.
Bye.
Cheers, guys.
Bye.
Bye.
Bye.